Here's our stock in focus segment. We're looking at Pandora, and this is one that really started to break down pretty dramatically. It was up at $15 and it sold off and opened up down to $10. So really a dramatic move to the downside. And when you look at the chart, it doesn't look so bad here. You see it, people like to say that, we were forming a cup with a handle, so to speak. They like to use that analogy here. And you could see it trying to rally back. It did pretty well. It held the 100-day moving average, started to accelerate, broke to a new high, broke through the prior range. So it was showing some signs of, going higher here. But on the surface, that's what it looks like. But if you look a little closer to the price action and how it really was trading, and you have to kind of look at it from a longer term perspective. Here you're looking at, and when you look at it from the longer term perspective, it shows you, certainly a much better view of what's really going on here. And I think it's easy to get clouded by some of the day action because sometimes when people say, well, this is one of those kind of act of gods, you couldn't foretell as a chartist that was going to happen. And sometimes it almost seems like that. It can be frustrating. Sometimes it's difficult to be sure all the time and you take a judgment call. But in here, I think it was quite clear. First, you have a high of around $22. Then prices go through a sell-off to around October, hitting a low around 9 or approximately there. And you see it come rallying back, comes back to a move around $16, then sells back off again, coming very, very close to the prior swing low. Now the major low, first low was 933, and then this next one was 915. So it did go to a new low. We could say it's an incidental low because it's only about 15 cents or something along those lines. But then you see it trying to rally back here. And as you look at it rallying back, you could see that the prior swing high, the major high, was around 1597. So it had the first swing high it had was 1598. Then it made a second attempt at that high at 1597. Then it went through another correction, and then it took another attempt at 1597 and stopped at 1597. Then it made a fourth attempt, and it stopped at 1589. So you could see clearly that 16 is a major resistance range for Pandora. So now, as you start seeing prices rally back after a decline and it starts to come around, guess what price it's at? It's at $15.25. So I guess the risk would be when you start to see it come into this 15 range, knowing this prior swing range that it failed so many times, would you be in the stock for only a 75-cent move to determine now, is it going to break through 16? I mean, how unrealistic is that? So when you're looking at from a trading standpoint or a money manager, not only is it a new stock that hasn't really developed itself, you don't have a lot of trading history because it's new. It's in a great industry. You can make, that's the problem with fundamental analysis. You can always make a great case for something, or you can make a case against it. It's so easy. People could say, well, it's in the new technology. You can download it. A lot of people use it. It's it's on a lot of VCRs when you get them. And you can DVRs, and you can use them right off the bat. But the real issue here is that you could see that this stock was unable to really break that 16 range, and it did it 4 different times. It couldn't break through that range, and now you saw it trading at $15.25, trying to make a break through that. So the odds is that it's going to be difficult for it to do it. And then what's the point of trying to see if it's going to do that? So you want to make sure you get out into a position like that. It wouldn't even make sense to go long. So from a technical standpoint, yeah, it could have broke through that, and you could have missed a big move if it broke through the 16. But what was the risk-reward ratio, and what was the probabilities of that not happening? They were pretty high. So then you saw prices come to a very natural resistance range and then went through a sell-off. Also, if you kind of look at this and you kind of just draw your trend line right off of that, coming right off of that last